Yusuf, many thanks for those details. Now, Jeh Aerospace has raised $11 million in a Series A funding round led by Elevation Capital. The company is backed by big names like Indigo Ventures and former India heads of Airbus and Boeing. Their facility in Hyderabad builds high-precision aerospace and defense components, supplying parts to Tier 2 manufacturing companies like Spirit Aerosystems. My colleague Madeeha Mujawar spoke to the co-founder, Vishal Sanghavi, on how they plan to use this capital and where do they see themselves in the next few years.
Investors have been very happy with the growth and the speed of growth that we have achieved in a very short time. Since the raise of our funding from General Catalyst in January 24, we have scaled up truly fast. Today, we are a strong team of 100 people. We have delivered high quality, flight critical, more than 100,000 parts already to our existing customers in the US.
All right. So now this fresh fundraise, how do you plan to deploy the capital? Will it go into capacity expansion, product development, or certifications? If you could give us some idea on that.
Sure. So two broad areas that we are going to invest this into. One is, into significantly upgrading our capability and capacities as far as the manufacturing technology is concerned. So we would be expanding that significantly. Second thing is, to further deploy capital in enhancing our digital stack. We believe that the digital manufacturing would be the way to be as we grow this organization. And last but not the least, we'll continue to invest in building a very, very strong team across all the functions.
All right. How much did you have to dilute from your stake for this Series A round, if you could tell us?
So, it's the same way, I think, asking the question of the valuation. So, I will let that pass as you can appreciate it. But again, I think we're truly trying to build a long-lasting, sustainable, world-class aerospace organization from our side.
Then take us through your financials. What was your revenue in FY24, FY25, and what are your growth projections for FY26? Have you hit break-even?
So, very happy to share with you. Madeeha, again, if you check our background, we have successfully run large aerospace business in our past corporate avatars. So we understand how this business is done. The way this industry is, a lot of people say that you need to burn money, but that's not how we see at things. Last year, we had a healthy profit. We will continue to have healthy profits this year as well, because we believe it's important not to just continue to burn money, but rather, while creating value for your customers, also ensure that we do it in a healthy way from our own organization standpoint.
So last year, you mean FY25. So what was the profit that you made in FY25?
So again, we're not sharing the profit and the revenue numbers at this time, as you can imagine. But again, a significant revenue from a first year of operations. We will, be 3xing our revenue this year from our last year. So again, we'll continue to grow on those fronts. And you can sense that if we have a 100 people team and it will have to be backed by good revenues and good profit to handle that.
All right. So what aerospace components do you manufacture? If you could tell our viewers, which aircraft types have your parts?
So we at this moment manufacture flight critical components for aero engines. So these are the engines of the aircraft. So they are some of the most complex components because of the type of materials that are used. Very hard metals have to be machined like titanium and Inconel. Also very, very tight tolerances are needed in each of this. So, in micron level tolerances that are needed. That's what makes this business very complex. So a lot of our parts end up into a lot of the GE engines eventually. It might be GE LEAP, so on and so forth. And some of the parts also go into the structure side and on the tooling side.